It's Ryan Kravitz from Milestone Wealth Management and Insurance Solutions, coming to you with an educational economic update for August 2016. So in this month's video, we're going to talk about some of the events that influence markets in July, and we'll also give you some insight as to what they can mean for you as an investor. Also, make sure to stay tuned at the end for a required disclosure statement. You know, markets had a lot to think about in July. We had a British exit, interest rates, and earnings seasons, which all affected market movements last month. You know, after dropping sharply at the end of June following Britain's vote to leave the European Union, the markets, they regained steam and they rallied for 4 straight weeks. They ended up pushing the S&P 500 and the Dow to new records. You know, we often talk about the importance of not overreacting to market declines. Well, this is the reason why. You know, we can't predict how markets will perform after a shock, but the biggest market days often come shortly after a pullback. Calmly assessing the situation and avoiding emotional responses is a smart strategy for long-term investors. All right, so let's talk about some of last month's economic events. You know, the Federal Reserve, first of all, they held another open market committee at the end of July, and they voted to keep rates steady. You know, the Fed's decision at the time wasn't surprising, and now the debate it's on over whether or not central bankers will raise rates even at all this year. You know, investors were surprised at the end of the month also by a low first estimate of second quarter economic growth. I mean, the first official measure of second quarter GDP showed that the economy grew at just 1.2% over the previous 12 months. That's after growing at 1.1% in the first quarter. So this came as a big shock, as economists had expected to see over 2% growth last year. And over the past few years, the economy has set a pattern of really slowing down in the first quarter, and then it just would come roaring back in the second. You know, though we'll see several more official revisions of the GDP growth estimate, 2 quarters of slow growth, it is concerning. So I will say this, when looking at the data, we see that a drop in business inventories, it ate away at growth. And economists expect to actually boost economic growth in the rest of the year as businesses rebuild their stockpiles. You know, another thing, too, is that consumer spending was the biggest driver of economic growth last quarter, which is a great sign, really, for the economy. And a strong labor market, rising home prices, and wage gains all support additional consumer spending throughout this year. You know, the Federal Reserve took the GDP report in stride, and they stated that they believe the near-term risks have diminished. So we can take this to mean that they want markets to prepare for a possible rate hike perhaps later on this year or maybe early on next year. So what can investors expect in the coming weeks? Well, in one word, volatility. Overall economic fundamentals in the United States, they're looking solid. However, turmoil that's happening overseas, we have a presidential election, and then the anticipation of a future interest rate increase that will likely affect market movements as well. So, as always, we'll make sure to keep you informed. But that's it for this month's economic update. Once again, this is Ryan Kravitz. I'm with Milestone Wealth Management and Insurance Solutions, signing off for the month of August 2016. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call. Number is 714-462-9155. We'd be happy to talk to you then. Until next time, take care.